Good evening and welcome back. Well, the country is in despair because load shedding is really messing everybody around. If you hear something in the background, it is the generator that kicks in. How do we do business? I don't know. It will definitely harm the economy, but definitely the powers that's in control of this country probably realize that no, nothing to worry about. They've got a different opinion, and I think the sooner the better the private sector can get involved, we can maybe see this solution of the Eskom crisis. Otherwise, really, I think the economy will definitely harm, and I mean unemployment will just go up, and eventually we'll land up with a situation where companies cannot do business because if you've got maybe an hour or 2 hours a day maybe off, but I mean when you go to 6 hours and 7 hours a day, who will have the guts to get involved with the business? But I mean, let's kick off with some of the shares and some of the requests. And the first one is Jubilee, of course. And if you look at this drop here, it dropped from 289 almost in one go in a matter of few days to 213. And as we all know, this is a clear waterfall formation. And I've said it many a time before, a waterfall formation is actually a positive formation. Not for the time when it's dropping, but eventually we'll get to a point where it does not drop any further and it turns around, and it usually gives you this beautiful bounce, what we call a V reversal. And that is out of that massively oversold situation where everybody just dumped shares at some point. We know that the fundamental analysts will say, but wow, this share is definitely worth more than 230, and then they will get in and they will start to bite. And this is exactly what happens. And I want to say to the viewer that requested about it, I'm seeing a little bit of a positive situation here, and there you are. I'm seeing a inverse head and shoulder here, and we are above the right shoulder and above the neckline, and the neckline is sitting at 272. And as we all know, an inverse head and shoulder, when it plays out, it usually have two, you can say, conservative target and a target that reach it in the end. And there's the conservative target. The conservative target on this one will be 283. And if it plays out to the full, let's go there all the way. And I just want to do the extension there so that you can look at that. And there you are. Oops, we can maybe see a share that surprises, and it takes us all the way up to, can you believe it, 321. But for me personally, this is a share that's been sold off just too seriously, and suddenly it bounces back. And usually, fundamental analysts pick up that a share offers value at a certain point, and when they come in with a vengeance. Only one thing for water formation that you must always consider. And a waterfall formation can only give you a V reversal formation, a nice relief rally, if there's not something wrong with the company. Can you remember that there were shares like Great, Able, some of those companies, when things turned around and things got ugly, the share almost just sell and sell and sell day in and day out. So then it's a different story. But with a share like Jubilee, get to a point, these guys are making money, they produce something the world wants, and then usually it answer. But at the moment, positive above that neckline. If you want to buy, use the stop loss of 262, and then you just protect your capital, because we're in a strange market. We are in a rising interest rate environment, and that can change things suddenly. Let us look at Sanlam. Sanlam is a wonderful company. They do wonderful business. They sit on massive loads of cash, and they are always in the process of developing, improving their business model, and sometimes they buy into companies. What I don't like here is that testing quite an important support line. Now, can you believe it? A company like Sanlam is testing a line, and the line is sitting at 54.20. Now, 54.20 is quite an important level. Reason being, you've got a left shoulder here, you've got the head, and we've got the right shoulder. Now, can you believe it that a top company like Sanlam will sit on a head and shoulder after it has dropped? Let's just show you here. I mean, earlier in the year, the share was around 72 Rand. Now it's 54.41, and it looks like this head and shoulder formation is going to turn out to be a continuation pattern for more weakness in the share price. Now, if I look at this, of course, I will give you two targets. The conservative target, let's do the extension there, will take it to 52.32. But I don't even want to show you this target, because if it drops below this neckline, there you are, you can maybe take this company, can you believe it, to 47.68. If I zoom back, it traded at this level in November 2020. That was in that COVID selling period where everybody just dumped stocks and they did not believe that there is any recovery due. Now, this is the problem. If Sanlam drops below this neckline and starts to go below that, and you reach all those levels, you can actually reach for the 2020 lows. And why do I show this chart as well, except from somebody requesting about it? I want to show you the chart that a lot of analysts believe that some of the shares must actually return to those lows before they will offer a real value. So maybe we don't know, but I don't like this head and shoulder formation in Sanlam. Kraft Heinz is our next share to watch. If you look at this share, let's go and have a look here. What do we see? I don't even want to say that. We're seeing exactly the same formation as what we've seen with Sanlam. Now, Sanlam is a top solid company. There's absolutely nothing wrong with Kraft Heinz. I mean, worldwide company, listed on the New York Stock Exchange, on the NASDAQ. And we are sitting on a head and shoulder formation. And what worries me the most is, look at this. A technical could buy this right at that neckline. That is not positive. The way that it went, it dropped below this level. There you are, below 36.81. It came back, it bounced back, tested that level of 36.81, and since then it was sold off. Yes, what we will see is we'll see these bounces, but unfortunately, while the share is below 36.81, things are not looking rosy for Kraft Heinz company. And for me personally, I will not touch the share. I know it's a wonderful company. I know they've got a lot of money. I know they've got a brilliant management team. But I've seen now with Discovery locally, they just decided not to pay out a dividend, and the share dropped 30% on almost nothing. Why? Because the price to earnings ratio was just too high. Everybody just believed that the company will just always pay a dividend. The directors will not change that idea. And what do we see? Same with Kraft Heinz, top company going down, just shows you that liquidity is drying up. People are scared to buy shares, and that makes me nervous. And while it's below this neckline, let's rather leave it out, and we can always look at it again. Next one is Kentucky First Federal Bank Corp. What do we see here? Lower highs, high, lower high, consolidation here. Broke down out of the consolidation. There you are. Let's see. There you are. You can see it broke that line. It's trying to recover above that. And for me, I've said it many a time on the program. When I see a share stuck in a consolidation, don't know what to do, the best is to wait. And I know maybe you like the company. The person that asked for the request was, I want to buy it for the long term. Now, for me, it's quite simple. If you want to buy it from the long term, wait for this share to break out of this consolidation above this line, $8.01. Make it $8. And you've got a stop loss, nice stop loss of $7.40. You know if it breaks above that, it will probably go and test this previous high of $8.71. For me, if I look at the share, if I see that the share is stuck in a consolidation, rather leave it alone. Let it shows you what it wants to do. And I've said it many a time. Sometimes a trade actually comes to you. The chart tells you when to buy. This chart at this point in time does not tell me when to buy for the long term. For a trader, yes, you can maybe buy close to this line, take your profit there, take your stop loss at 7.16, but for a long-term investor, wait for this line to turn into a support. Johnny asked about Nano Dimension. Well, my friend, I want to buy it, but I cannot see any conviction to buy the share because it rallied beautifully from $2.27 all the way up to $3.61, and suddenly we see high, lower high, lower high, all the way, and I think we're actually on our way to test this previous low. There's the low. Let's get that. Well, that low is sitting at $2.27, and can you believe it? I mean, this share was, let's just have a look here, was a share of around $6.50 October last year. That just tells you that definitely the share is definitely in a phase of selling, a phase of downward trend, so the best is just to sit and wait. Let's see where you can maybe look at buying the share. I think probably close to this line we'll find a little bit of support. But for me, I will wait for this little resistance to turn into a support before I will look at buying the company. And that will be above $2.79. Above $2.79, yes, I will look at the company. Probably if it bounces off there, my stop loss will be $2.26, and we can maybe bounce up to $3.07, $3.23, and maybe as high as $3.59. But for me at the moment, still a downward trend. Don't touch it. Wait for it to consolidate. Wait to give you a higher low. For me, Nano Dimension, Donnie, unfortunately, not a buy in my book. Just wait, keep your cash, we'll get another opportunity. Well, thank you for watching the show. Visit our website www.fransdeklerk.com for more info, and we will chat again.